Hey guys, I'm Naren. I'm a day trader. This is my first unscripted video to show you guys how I day trade. I've been wanting to do this for a really long time, but I always pushed it off, thinking, I'll do it when I'm really successful at day trading. But I decided this weekend to leave that and let it happen when the time is right, and just show you guys where I'm at right now in my journey, and let this YouTube channel be as a journaling platform for me, and also to some of you aspiring day traders, and see where it goes. It's just a experiment in my journey, and that's where I'm at. So it's gonna be a 5-minute video. So starting off today, I plan to show you all my day trading every day. So as soon as the day is done, I'm gonna upload a video with the day's trade and talk through my technicals, talk through my mentals, and explain you guys why I took that trade, how much I risked, how much I made, or how much I lost, and journal things for you guys and also for me. So we've got 2.5 minutes. So what we're gonna do is I'm gonna show you guys my trade from Friday. It's a trade that I took on the NASDAQ QQQs. So I'm gonna show you guys what I did, how much I raised, how much I made, and close it off there. Alright, now I'm gonna show you my TOS think or swim account, and get to the charts in a moment. Alright, what you guys are seeing here is my TOS chart setup for QQQs. I'm scrolled to the left. I'm not showing you guys the price action for Friday because I want to talk through my pre-market plan, how I began the day, and then after I'm done with it, I'm gonna show you guys what the market did and what I did during that time. On the top left corner, you guys can see the 15-minute chart. On the top right corner, you guys see the 5-minute chart. On the bottom right corner, you guys see the daily chart. On the bottom left corner, you guys see the weekly chart. So starting on Friday morning, the market was opening at, if you guys look at my weekly chart, bottom left side, you guys see that the market was opening at where my pointer is at. It was opening at 460.2, within a few points of that range. And on the left, on the weekly chart, you see that the market was on a downward trend for the past 10 weeks. If you notice this, the lower low that was created and then the lower high that was created in the last 2 weeks, and this week continuing to sell off post just last week's sell off and a little rally up. And then what happened this week was the market sold off on Monday, or I think had a little break of the last week's low, and then rallied up a little bit. But by the end of Thursday, we had reached low point, breaking last week's low and also creating a structure where it felt like the market would continue to the lower lows that were created in August. So the weekly seemed weak, and if you'll see the bottom right side, the chart is for the daily side of things, and what you can see here is also the same thing. The daily, the past 10 days to 12 days are also in a downward trend, and on Thursday and Wednesday the market sort of tried to break the lower lows of that channel, downward channel, but there was some buying pressure, and which got rallied up, which got bought up pretty well by midday. But what's been happening is Wednesday and Thursday sort of kept selling off by the end of the day, and come Friday, we the market wasn't strong. It opened again at the I think the close of Thursday at around, like I said, 461 range. And when that happens, the market is still at the lower lows of the channel, and it's not very strong. It's not very strong place for buyers to be really optimistic about a move up to the higher highs, the lower highs of the channel. So my initial thesis for Friday was that if the market sort of even rallies, it's going to be a small rally, and if it isn't, and if it shows us some strength, we could possibly take a move up to the lower highs of the channel. But if it doesn't, looking at the weekly, it seemed like it would continue towards the lower lows from August. So the weekly was sort of seeming weak. The daily also was sort of seeming weak because it was opening at the close of the past couple of days, Wednesday, Thursdays, reversal, reverse hammer sort of structure. So the goal was, if the market sort of gives a position in a strong position downwards, I would enter on that. Now let's look at what happened when the market opened. So if you look at the top right side of the screen, this is the 5-minute chart, which I use predominantly to trade, to enter and exit on trades. So the market, like I said, was opening at the lower lows of the downward channel. If you'll see these channel lines, they sort of correlate to the top section here. And then this is the first bar. So the market sort of opened. It didn't sort of provide any direction. It was weak, but it got bought up again to the opening print. And then what happens next sort of gave an indication of what was to come. It was a pretty strong bar. It dropped down by close to 2.5 points, which is a big move on a day. It signifies that the market is sort of weak and sellers or buyers are in control. At this point, technically, it was doing what I was expecting and what I wanted. Structurally, the weekly and the daily seem weak, and as the market opened, the first 10 minutes seemed very weak, and which was a good sign. But at this point, mentally, what was going through my mind was I had already lost on a 2.6 point move. Ideally I wouldn't enter at the open, but if I were to take a trade, a risky one, I missed out at least on a $1.5 move. And translating that to options, that would have been at least about 50-60%, which is a good trade. But risk wise and my plan wise, it didn't make sense for me to enter. So what I was waiting for is a proper swing for me to be confident about what was happening. So I was being patient, though I was feeling the a little bit of FOMO that was happening in my mind. What happened next was the market continued to trend down, touched the channel here and reversed back up with quite significant strength. At this point, my understanding was it would either this would have been the lower low of of the day, and it would continue to break the structure and continue to trend up, following the the trend of what was happening on Wednesday and Thursday, where the market was opening low, but it was getting bought up quite a bit in the beginning of the day. But what happened next was interesting. So the market, QQQ trended up a little bit. Not a lot of buyers came into the picture. If you see the volume, it's pretty low. This small bar here, it's just 600,000 or 450,000 shares exchanged, compared to the last few bars, which were around 1 million shares exchanged. So not a lot of volume with buyers going up. And if you see this bar, it is reverse hammer structure, which means the market sort of trended up, but the sellers sort of pushed it down, not only to the opening of the bar, but also a little lower to the bar, and ended on its close. There's no wick in the bottom here, so that's a sign of good strength forming, in a direction. In this case, in a bearish direction. So it did exactly, what a good setup would look like, and the goal was, if the next bar sort of broke this weak bar's low, I would enter on a trade, and that's what happened. The next bar sort of broke the third bar, the actually 1 2 3 the fourth bar. So 8:40 in central time where I live, and 9:40 EST, New York time. 9:40 bar close at 9:45, so I entered at around 9:45, 9:46, and the bar sort of was weak. It continued to trend down to the almost close. There's a little wick, so it was showing a lot of weakness, and you see the volume is also increasing from 500,000 to about 600,000. So there's more people joining the trend. And then if you see the next one, it sort of trended up, but also came down again, forming a reverse hammer, which means there's even more strength. And then when I entered the trade, one thing to notice is that this white line is where my stop loss is. So if this trend were to shift, and this is where I entered, where my cursor is, and this oval is, if this trade were to reverse and hit this white line, it would structurally change the direction of where the market was going, and this is where I would get stopped off. This was about a $1.5 move up to my stop loss, and this in options would be around 40% risk, and I entered with about $900, so I was risking about $360 on this trade. But it worked out well. The market continued to trend down, so I continued to hold it. I had already made about $2.6 moves, 2.6 points moves, which equated about 60-70% in my options ROI. But my trading style is adding to my winners. This is something that I'm trying to develop recently. I'm holding on to my winners and trying to increase my profits when the trend is in my direction, and that's what I did today. So as the market was moving down, I was trailing my stop loss. If you see, these white lines kept coming down, and then when I saw the next significant swing, that's where I took another entry, adding in another $650. At this point, my size was around $1,500, and if you noticed, my stop loss had come down to calculate where I entered on the second entry. So at this point, on the whole, I was risking about 25%, so still at around $360 to $450. As I entered on the 5 to 9:10 5-minute bar, what I was seeing is the market showing a little bit of struggle to continue moving down. If you see, there's a wick here that formed, which means the swing was made, the market opened the close of the 9 o'clock bar, and it rallied up. After it gave me an entry, it rallied up to my stop loss. So when that happens, you start to think that it's not going in your direction. But things worked out, and then what happened was the market flushed down another one point from my second entry, which is where I exited from almost all of my position. So my first entry gave me a $3.5 3.5 points move, the second another 1 point move. So on the whole, on the options, it was about a 77% ROI, which was about $1,250 profit. So what happened next is what I'm trying to get better at. Ideally, at this point, I should be holding the position, because what I'm seeing here is incredible strength in one direction. The market is closing at its lowest point, and it's not wicking, it's not making a push up. The last order on the auction is being bought off at the lowest price, which means there are people waiting to buy more shares at even lower prices, and there's people even willing to sell at that price for people to buy at those lower prices. So at this point, if you guys notice, the volume had also increased compared to the last few bars. So that meant that this was a good bar to continue to hold. What happened next was exactly that. The market continued to sell off again to its low, but the white bar is where I had exited off of most of my contracts. This is what I'm trying to battle, holding onto my winners, and it's a struggle. I'm about 2.5 years in to trading, and it's never easy, and it's every day is a learning lesson. And hopefully in the many years to come, I'll continue to build that skill and build that mental strength to hold that position for longer. And what happened next, as we saw, the volume increased exponentially from the first bar that flushed down at around 567k shares to the next bar, which closed pretty strongly to 763, about 200k more. So it's close to like 40% more activity. And the bar after that also closed close to 700k, about 30% more activity so than the previous prior two bars. So what we're seeing here is there's good strength forming, and that's where the hold is required. Given that not all of the days that happens, so there's activity at different zones in the market where there's a lot of limit orders that are placed, and even if there's strength, those limit orders from these corporations, from these hedge funds, take out that strength of a direction. So I was buying into that idea. I don't trade levels. I used to trade levels in the past, but I don't trade levels anymore. I only trade price action. That is the promise I'm making myself, that I only want to trade price action. So if you see, what's happening next is the market is continuing a sell-off. Another beautiful flush down, right, with increased volume, selling off at its low. Another reverse hammer, another beautiful flush down, another proper swing that's going to form. And this one, that's what I meant by there's levels in the market where things get bought up completely. Look at this volume here, 1.6 million shares. So that's more than 150 times the amount of shares that were traded in the past 1 hour and 1 hour or so. So at the end of the day, I'm not gonna go through the entire day's worth of bars. We're gonna do that again. If you guys like it, I plan to do bar by bars. Let's sit down and analyze each bar and see what's happening with the activity. But that's what happened at the end of the day. If you see the daily here, the market sort of sold off by about 2.3%. That's about 10 points, and on the options that's about 400-500%. Every $100 will make $500, but never think in those terms, because we can never capture all of it. You can at some point in your life, but only think in terms of risk, how much you're risking, how much you're winning. In this trade today, I risked about $400 or $350 and made $1,250, so that's about 4 times my risk. Those are the trades that traders should aim for, and traders should hope to aim for and learn and strive to get to. So that's my journey for the Friday's trade. I also want to legitimize that I really took those trades, so I'm gonna show my TOS activity. Alright, so this is my activity. Got filled, and the first fill was at 0.92 per contract, and then the next fill was at around 0.38, and then filled at different places when I was selling off, and the last one at about 2.15 in total. That was about a 77% win for the day. So this is my trade Zella. Alright, so this is the trade, 1224, 77%, 4 times realized. Alright, so this is what it is, and I'll see you guys tomorrow to just recap my trade for Monday. Thanks everybody. Bye.